Hey guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be showing you why I believe PayPal is the most undervalued stock in the entire stock market. Now, in making this video, I do realize that PayPal is actually becoming quite a popular retail investor stock. I'm seeing it more and more on YouTube and especially on Twitter. So if you're part of the gang, let me know in the comment section down below. But if you're not, don't worry. I have something for you as well if you're looking for an undervalued stock to potentially buy. But first, I realize that a lot of you watching this video might be new to my channel. If that's the case, make sure you subscribe down below. We have the best community ever here on YouTube, and you can join it for free by hitting the subscribe button. Without further ado, let's jump into this. So for PayPal, it's been pretty rough since July of 2021. Since then, we're down more than 80%, which is crazy considering this is a $66 billion company still, and it's very rare you get a company of this size to move 80% up or down. There's a lot of reasons for the downturn, from a global slowdown to poor management decisions. I mean, the former CEO got way too political. A lot of people closed their PayPal accounts. And honestly, the management team just lost focus. I'll put it up on the screen. They even made a bid to buy Pinterest, which really, again, is getting away from the primary focus of what PayPal is. But you also had high interest rates, recession fears by the markets, and obviously a payment processor isn't going to do that well if we see a recession. So there's numerous reasons why it's down 80%, but bottom line, I believe it's gone down way too much. To put this into perspective, if you go to the valuation measures page on Yahoo Finance, you'll see that the forward PE ratio for PayPal is less than 11. Typically, the average forward PE ratio for PayPal in the past has been 30. And if you do ever find a company that's trading for close to a 10 forward PE, it essentially means the market doesn't think there's any growth left for the company, but that's just not true. For the current year, and keep in mind for the last year and a half to 2 years, we've been in a global slowdown, economically speaking. PayPal still grew their revenues at 7.5%, and analysts have them growing revenues this year in 2024 8.2%. Just a sneak peek for the end of the video, I actually think this 8.2% projected growth in revenues is very wrong and very low, but I'll get into that when I show you my price target spreadsheet. Let's focus on the 7.6%. Sure, not great, but again, they did 7.5% revenue growth in a time period where the global economy was in a slowdown. So what happens to the revenue numbers as the global economy picks back up? But given that the markets are expecting basically zero growth through PayPal, let's discuss why that's going to be wrong. I mean, we have Venmo. PayPal owns Venmo. Right now, Venmo is a low margin business for PayPal, but the growth in users at Venmo is incredible. The only thing that the company needs to do is figure out a way to monetize their user base on Venmo better. Maybe the answer to that is the Venmo credit card, or maybe it's a checkout option for Venmo when you buy things on eBay, for example. There are several different levers that the company can pull in order to better monetize their Venmo user base, and their margins there will expand if they find a way to do so. But in my opinion, the best opportunity for growth at PayPal is actually via their payment processing business. They have PayPal Complete Payments, which is for small and mid-sized companies. This is really yet to be rolled out and scaled. And they also have Braintree, which is for large corporations, Adobe, Booking.com, etc. And we also have this, the most popular payment options by continent. PayPal is the most popular payment option in 4 of the 6 continents on planet Earth. So all you need to happen in order for PayPal to grow its revenues is for total payment volumes to increase, which they are dramatically. Even more, yet another lever PayPal can pull for more growth is buy now, pay later. This is a really exciting thing. It's kind of a new thing as of the last 3 or 4 years, but just think of what buy now, pay later has done for the global GDP and what it will do for the global GDP in the future. Sure, maybe it allows consumers to make purchases that they shouldn't be making given their current financial situation, but that's a whole other argument and point. Regardless, this is allowing people to purchase items, which boosts global GDP. And again, this is a relatively new thing, so this industry itself is going to grow very, very quickly. And PayPal already has quite a large business inside of this industry. But in my opinion, the new CEO of PayPal, Alex Chriss, should really focus on acquiring a younger user base. The younger users are the ones that are spending more and saving less, and they're also the ones that are using digital payments more than anybody else in the world. And let me tell you, PayPal has never had an issue growing revenues. I don't think this is going to be an issue at all for the company. I mean, just look at this chart. This isn't updated as of 2023, but every single year that PayPal has been a company, they have grown revenues. But again, Wall Street is pricing this company for 0% growth in the future, which doesn't make sense. So let me get into this spreadsheet now. All right, first off, this spreadsheet is actually my more conservative price target. If you want to see my more aggressive price target, go watch my most recent video that I did on PayPal. Click the eye in the top right-hand corner. But remember, this is more of a conservative price target, but it still represents tremendous upside for the stock, regardless of whether it's conservative or not. If you want access to this spreadsheet, I've included some really cool things. It's available to all my paid monthly members. You can join my membership by hitting the join button located right next to the subscribe button, or hit my Patreon link in the pinned comment. It's the cheapest membership on YouTube. It's the best membership on YouTube, and we have the best community, and it's not even close. And if you don't find value in it, I will 100% refund you. Nobody has yet to ask for a refund, so let that speak for itself. But anyways, despite Wall Street pricing PayPal for 0% growth, the analysts are saying something much different. So there's a weird disconnect between the way PayPal stock is trading and what Wall Street actually expects the company to do. I believe these projections are low, and I'll show you my projections in just a little bit. But regardless, this year in 2024, analysts expect the company to grow their revenues at 8.4%. And then they expect that to expand to 8.75% in 2025. And then in 2027, they actually expect close to 14% revenue growth, et cetera, et cetera. You can look through this. The earnings growth is very encouraging, where this year in 2024, they're expecting 11.6% earnings growth. It's always a very good sign when you own a company that is growing their earnings and profitability more than they are growing their revenues. That's a sign of a very, very healthy company. In 2025, they expect earnings to grow 11% flat, and in 2026, they expect them to grow revenues at around 12%. But now's the time for me to show you my projections. Keep in mind again that this is my conservative price target. For this year in 2024, I expect PayPal to grow revenues at 10.4%. I believe this year their total revenue number will be $33 billion. In 2025, I expect their revenues to expand to close to 11% growth, bringing in $36.5 billion. And then in 2026, I expect the company to come in with close to 12% revenue growth year over year at over $40 billion. So compare that to what Wall Street estimates are, and you can see I'm slightly above what they expect, but I've talked about this on my channel recently with Nvidia and Tesla. Analysts have been so wrong about the macro economy. So they have, for example, during the tech bubble for PayPal, they were way too optimistic, and I think now they could be too pessimistic. Analysts are always wrong, and depending on which way they're wrong, these PE ratios and multiples and how these companies are valued could be incorrect based on Wall Street analysts' expectations. For 2024, I expect the company to bring in $6 of earnings per share. Analysts expect them to bring in $5.50 earnings per share. For 2025, I expect 7.75. Analysts expect $6.16. And then for 2026, I expect $9.50, and analysts expect $6.9. Now, the reason there's such a disconnect here is because Wall Street does not expect these cost-cutting measures to last through 2026, where I think PayPal from here on out, with Alex Chriss as the CEO, is going to be very focused on margins, margin expansion, net income, profitability, and that's going to make a huge difference when it comes to earnings per share. We also have the fact that PayPal has been on record saying that they want to use 80% of their annual free cash flow to repurchase shares. When companies repurchase shares at that aggressive a pace, it means that they too believe their stock is undervalued on the public markets. So you can see here in my valuation analysis, I have assumed a recurring share buyback of 3% of the outstanding share count. For 2023, the company actually repurchased about 5% of their outstanding share count, but because I believe PayPal stock is going to go up, that means they can repurchase less shares for the same amount of money. It costs more to buy that stock. It makes sense, right? So I expect as PayPal stock price goes up, they're going to be able to buy less of their outstanding share count back. In my more aggressive price target spreadsheet, I actually assume a 5% share buyback, which is possible, but I do think 5% every year until 2026 probably is a little too aggressive. But for my price target, I didn't include the price to sales valuation. I included the PE valuation, which for this year in 2024, I think the fair value for the company is $120. For 2026, I think the fair value is $193.69. Now, remember that these are forward-looking numbers, so I actually think that in 2025, the share price of PayPal should be this $193.69, which represents 217% upside for the stock. And this is just with the company getting back to a 25 forward PE multiple. Remember, I said that on average, PayPal trades at a 30 to 35 forward PE. So this isn't even the company getting back to what's normal. This is still below average. But again, this is more of a conservative price target. And even so, again, I expect over 200% return in the next 2 years with PayPal. And then yesterday, I was a big nerd and I put together this Blue Angels is what they call it, implied price chart, where you can kind of see where the stock is trading at now to where it traded at in the past compared to different forward PE multiples. The bottom line is a 20 forward PE multiple, middle is 25, and the top is 30. And you can see currently the stock is $61. And you can also see in this chart that the stock has typically traded way above even a 30 forward PE. But again, that was kind of during the tech bubble of 2021. So those numbers are a little bit iffy. And I do need to mention there is a risk here because we have a new CEO in place. He might not be as big on share buybacks as the previous management team was. That is a possibility. I don't think it's likely, but that is a possibility. Alex Chriss could cut the share buyback because he thinks there's a better use for their capital. Maybe it's a merger or an acquisition, but as of now, I don't think that's likely. I think the company's going to focus more on what they have and growing what they have because Alex Chriss sees so many growth opportunities. I went through a handful of them in this video, but based on my numbers, I have a plan to actually become a millionaire on PayPal stock if everything works out perfectly. If you want my buy and sell alerts along with access to that spreadsheet, again, join my membership. Best community ever, but for certain, if you're new here, just subscribe. You'll love it. I promise you. Anytime PayPal stock has touched the $50 range, I have been buying as many shares as humanly possible. And I think I'll continue to do that even if the share price rises closer to $100. When we hit $100, maybe I'll start to rethink how much money I'm putting into PayPal. But for now, I'm trying to buy shares and accumulate equity in this company hand over fist as much as I can because I firmly believe this is the best opportunity and the most undervalued stock in the entire stock market, just based on intrinsic value alone. Forget all the growth. Right now, this stock is cheap according to historical standards. And because of that, this is a relatively low risk investment. So buying shares is an extremely low risk investment, but even purchasing some call options on the stock is less risky than it is when you purchase call options on other stocks, just because intrinsically this is a cheap company. But as always, the market has a mind of its own. Just because I think something's undervalued and other people think something's undervalued doesn't mean the market is going to agree with us in the short term or even the long term. Maybe we're completely wrong about this and the market is right, that PayPal has peaked, their growth has peaked. And maybe all that's true. I just don't think so. But don't forget, I'm not a financial advisor. Don't come back to my channel blaming me if PayPal stock doesn't go up. You make your own buy and sell decisions. I'm just talking about my own thoughts, opinions, and ideas. It's up to you to come up with your own thesis on these companies. But with that, I hope you have a great rest of your day. Keep 10 toes to the ground and your chin up. Stay blessed. Peace out.